We're joined now by Codie Sanchez. She's managing director at Cresco Capital Partners. And Codie, good to have you here. You say that you're adding impeachment risk to your Q4 market movers. What kind of an impact are you expecting this to have on the markets?
Yeah, it's a question on all of our minds, I think, as investors, and I think you can't ignore it. At some point, I know that all of us get this sort of belief that what's happening in China overall is going to impact the markets more than what's going to happen from an impeachment perspective, and certainly with what's happened just recently, China is of the main concern. However, we cannot ignore what's happening from an impeachment perspective, especially as we're sitting in an era in which we've only seen twice before in our history, we may actually have a president become impeached. I don't think he'll be removed from office, but we are telling our investors that in the short term, you should be prepared for volatility day to day.
Now, this just in, I want your perspective on this, Codie. Reuters reports that China's top diplomat says that the country will not be cowered by threats. He also says that this can move the country, or actually the world, into recession. What do you say to that?
Well, I would be surprised if China didn't come out with strong rhetoric, certainly given the fact that the rhetoric on our side is very strong as well. That being said, China is in an increasingly slower growth economy. And to be quite frank, I think they are impacted much more from the trade wars than we are here in the U.S. You can see that with their slowing GDP and a new era in which China has a GDP less than 6%. It's definitely different for them. I expect that they're going to continue to have strong rhetoric to this point. But to be frank, I think we can wait them out. And I think what will eventually happen is the same thing that we saw with Mexico and Canada, which is an increasing amount of noise surrounding trade wars and eventually getting to a deal. I hope that's not a bias, because that's certainly what we want to see happen. But we do believe that that is our base case and what we're telling investors.
And we've also got reports today that the U.S., the Trump administration, is thinking about limiting U.S. inflows into China, portfolio or investment into China. It's a long shot, but if that were to happen, what would the repercussions be?
Sizable. I mean, we've already seen in China that companies are moving to other parts of Southeast Asia. That's why we've seen the trade increase sizably with countries like Vietnam, for instance. And so I think China really needs to think about how this is going to impact their economy, especially given sort of the late stage that we're in the economic cycle. One thing that does mean for investors is that, quite honestly, I don't see a ton of upside in investing in companies that are heavily overweight to China from a revenue or geographical perspective. And in fact, we were looking at one deal in China in particular, and probably that gets put on pause in this environment.
What do you do with tech stocks, especially sort of the Apples of the world that do a lot of business in China, that have supply chains in China? Do you stay away from them for now? Do you hit the pause button on some of big American tech?
Yeah, I think tech's tough right now in general. I mean, we're having presidential candidates left and right talk about sort of, decoupling them. We're having people talk about, of course, the fact that a lot of their earnings are done outside of the U.S. And we have valuations that I think are quite high in this sector. So I wouldn't say that I'm extremely bullish on tech right now. I'm really looking for segments of the market that haven't had massive capital inflows and that are not IPO heavy, especially considering we've had, 57 of the last 120 IPOs kind of go a litof bit sideways for us.
Okay, so then share with us some of the sectors that fit that bill. What do you like right now?
Yeah, I mean, we're pretty niche. So one of the areas that we like in particular is cannabis, which not everybody can invest in, but is certainly beat up. I'm looking for areas where you don't have giant soft banks with billions of dollars saying capital is a commodity. So, that's one. I'm also looking at consumers in the U.S. So I would be interested in particularly broad basket of consumer discretionary stocks in the U.S. because consumer spending is up. We have the lowest unemployment, in the past 50 years, and we're seeing consumer spending, which we just got out, yesterday at better levels than we thought.
So should investors be betting on volatility here, which from our conversation, I think you think it's going to be that way for quite some time, given all the headline risk, or should investors be taking some of that money out of equities and looking elsewhere?
The tough part, right, is where do you go? I mean, with everything happening in fixed income, I certainly don't want to be putting my money in fixed income. I think equities have gotten pretty beat up this summer, so I still think that equities, if you're in the right sectors, are really interesting. However, I would be cognizant of the fact that if you're trying to do intraday trading, there's going to be a lot of volatility. That said, given everything we know about impeachment at this point, I don't think that these are complete market game changers. If you can handle a little bit of short-term volatility, buy on the dips, that's probably what we're looking at.
All right, Codie Sanchez, thanks so much for being with us today. Enjoy your weekend.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.